Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look now at some of the stocks on the move in Europe. I'm Stephen Carroll with Caroline Hepker, and we're joined by Bloomberg's breaking news editor, Louise Moon. Louise, let's start then with Verisure shares up 10% after their IPO.
Yeah, so Verisure, a securities trading firm, they had their IPO in Sweden today in Stockholm. So that price at the top end of the range, that was at just over 13 euros a share, and that meant that it raised 3.2 billion euros. It's the largest IPO in 3 years. So in 3 years for Sweden. So a big IPO for them. Their shares, as you say, soared after that. They were up as much as 10%. At one point, they hit as much as 22%. I think they're now down about, they're up at 18. So, but high gains for Verisure after IPOing, and it's essentially kind of indicating cementing Sweden's position as Europe's top exchange. They've been the top exchange for IPO fundraising so far this year, and there were some quotes by analysts saying, that more companies seeing this, more companies could come and could list in Stockholm. So good news for them this morning, being well received in Stockholm.
Yeah, absolutely. We were also speaking to the CEO of the FCA here in Europe, that's in the UK rather, Nikhil Ratty, about the car loan saga. And this is very important for UK lenders because it is a big legacy issue that is going to cost them money, but perhaps less than had been previously thought. So how is it affecting those lenders and those names?
Indeed, yeah, a long running saga. So basically benefiting lenders this morning. So it's positive news for them. So as you say, the FCA came out and they said that they're now expecting that these auto lenders will take an £11 billion hit to compensate customers. But a lot of these lenders, this was less essentially than they had previously indicated. So a lot of these lenders have set aside a lot more money than actually it seems will now be needed. So good news for them this morning. So the likes of Lloyds up more than 2%. Close Brothers, which is very heavily exposed to this, also jumped as much as 10% at one point. So we're really seeing this play through into the share reaction. So as I say, it means that they can kind of release a lot of this money that's been set aside. There's one estimate for Lloyds, for example, saying that they might be able to release as much as £300 million now. So the bank, they this morning have said that they're currently assessing the impact. But in the past, they have, at one point argued that this long-running car loan saga has made the whole industry uninvestable. So this news this morning is really proving to be a boost.
And ABB, Louise, at an all-time high after selling robotics arm to SoftBank.
Indeed, yeah. So ABB, the Swiss conglomerate, they've sold their industrials robots unit to SoftBank. So that's got more than 7,000 staff. It supplies a lot of products to manufacturers like BMW, and they've sold that for about $5.4 billion to SoftBank. So on SoftBank's side, it shows kind of their growing bet into AI, this global kind of wave of data center construction, and they're really betting on that. But for ABB, the reason that their shares are really reacting positively is because this is their focus on more profitable areas. So they had intended to spin this unit off. They've now sold it, and they're going to focus on areas like electrification and other areas that are also surging with this kind of spending on data centers. So it's a bit of a pivot for ABB and selling off this unit to SoftBank. So shares soaring on the back of that.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.